When I think about the direction of markets into the future here, I think about it in two time buckets. First of all, with respect to the long-term prospects for equities, I think the situation is quite supportive for it. One of the lessons that we learned during the GFC was that in circumstances where interest rates got cut to very low levels, and you had a situation where the economic prospects were stable to improving, you saw money being redirected into equities as an asset class, and we saw some very good returns being generated. I think that situation is being replicated again as a consequence of the policy response we saw around COVID. And so interest rates have been cut by central banks globally to very low levels. They have made commitments around keeping those interest rate levels stable for quite some time. And as a consequence, I think the opportunity cost for investors now when they look at either having money going into bank deposits or into equities looks increasingly favourable to equities. So money will continue to flow there. I think that investor positioning, remains reasonably defensive, sort of globally from an institutional perspective. Again, that's a positive. So you'll see more and more money from those larger investor groups also putting money to work back into risk assets, which is equities. And I think the other thing in the longer term, which gives me a lot of confidence here, is that we have a situation where the profit cycle that we've been through as a consequence of COVID is likely to be shorter than people had expected. So I think that again gives investors a confidence that they can put money to work here and that there is some form of clarity as to where the economic situation will be over the next 12 to 24 months. And I think it's looking increasingly positive. A lot of the economic data that we're getting through at the moment is actually quite, it's certainly a lot more positive than what had been expected, perhaps 3 months ago. But when I now think about the short-term direction for markets, there's always an element of randomness that comes into the direction of share prices on a shorter term basis. And what I mean by short term where we sit today is really over the next 3 to 6 months. But I've been very positive on where markets would go over the past 3 months, really since the lows that we saw at the back end of March. And the reason I did was because I could see the full range of forces which are influencing prices. We're looking, quite unambiguously positive and supportive for the direction of markets, and that was because we saw a situation where global policy with respect to fiscal and monetary policy was very, very supportive. We had a situation where investor positioning was very defensive, and therefore it was likely to see a redirection of capital away from situations like cash back into stocks. I think that's very, very important. And we also had a situation where, because of the policy response, that there was a renewed level of confidence as to where the economic situation, would go, and the fact that we had a foreseeable trough, most likely, in the economic and therefore the earnings outcome as we look forward over the next 12 months. So all that was likely to catalyse a lot of buy-side interest in the share markets. Where we sit today, though, I think there is just a range of different influences, whether it be COVID, whether it be politics. Markets have moved a long way in a short period of time, and I think as a consequence of this, there is this degree of ambiguity. And what I mean by that is that we're likely to see markets probably drift higher, but not do so with the same level of velocity that we've seen in the past 3 months. But there is likely to be a degree of volatility associated with it. And again, that's not necessarily a bad thing. That tends to happen at the stage of market cycles as investors and companies get themselves positioned for the next stage. And I think we're likely to go through that between now and the end of this year. But from that point, I am very, very positive as to the direction that equity markets are likely to go in the following 2 to 3 years, largely as a consequence of where interest rates are currently set.